pretty clearly a lot of evidence that we're going into a severe recession starting about now, fourth quarter of 2022 and going on into 2023. There was a little bit of a debate about the first half. We did have two consecutive quarters of declining GDP, which is, rule of thumb definition of a recession. I'll leave that to the National Bureau of Economic Research. A lot of people say, well, it wasn't a recession because unemployment was still low, et cetera, which is true.
Jim Rickard is an economist who is predicting a severe recession in the near future. He believes this recession will be much worse than the last one and will have a lasting impact on future generations. Rickard cites several factors that he believes will contribute to this recession, including the high levels of debt that both consumers and businesses are carrying, the increasing cost of living, and the increase in interest rates. He believes this recession will lead to widespread job loss and a decrease in the standard of living for many Americans. Jim isn't the only one worried about this impending severe recession. According to a survey by Allianz Life Insurance Company of North America, 66% of Americans fear that a major recession is undoubtedly around the corner. The survey also discovered that about 82% of these Americans believe that inflation would not only affect their purchasing power, but also worsen over the next 8 to 12 months. In this video, we will explore the impending recession, the economic indicators signaling its arrival, and why Jim Rickard says it will change a generation. Please watch, like, and share this video. Also, drop your comments and thoughts below, and don't forget to subscribe to the channel for more related content similar to this. We begin with another short clip of Jim Rickard.
And even if it was technically a recession, it was mild. And of course, we just saw pretty good growth in the third quarter. So if there was a recession, it's over, but not a good sign. That's different from what we're heading into. There's it's been a lot of inventory accumulation. Real incomes are not keeping up. You'll hear people say, "Oh, real incomes are up," or sorry, they'll say incomes are up 5%, and they have been, but they ignore the fact that inflation is running about 8%. So if your income's up 5 and minus 8 for inflation, your real income is actually down 3, and that's been true for a long time. So real incomes are suffering. Look at gasoline prices. Don't really need to. Everyone's familiar with the story there. But if it used to fill up your tank for $45, let's say, on your car, now it's $90. Compared to a year ago, or heaven help you if you have a Ford F-150 truck that went from $75 to $150, et cetera. And people do it. The demand's kind of inelastic. You need gasoline. You got to get to work or go shopping or do whatever it is you do in a car or a truck. But what it does mean, so you still buy it, but what it does mean is there's that much less money left over for everything else. So you cut out a dinner, a show, a concert, a new dress, a new suit, vacation, whatever it is. Other things get cut out, and that demand destruction kicks in. And then we see some very negative signs in, for example, the Treasury yield curve is inverted. It obviously fluctuates daily, but recently it's been inverted from 1 year, a 1 year Treasury bill out to the yield to maturity on a 10-year Treasury note. That's serious.
Rickard took time to stress the imbalance in real income and inflation rate and how gasoline prices have seen an upsurge in just a few months this year. Many average Americans are unable to withstand this, as they can't fend for other basic needs they need. According to an October post by Forbes Advisor, gas prices are expected to be on the rise again in the coming months. As OPEC is cutting oil production by 2 million barrels per day this November, the relief that consumers have been experiencing at the gas pump now tends to be over. All these are indicators that are showing how severe the coming recession would be on everyone. In the last decade, we've witnessed a number of global recessions. Many of these were short-lived and impacted specific industries or geographies. However, in recent years, the scope and impact of recessions have begun to extend further than what we have previously seen. It is no longer confined to one or two countries, but widespread with global ramifications. Listen to these carefully.
So, the rates are going up very steeply. So that would account for, kind of higher rates at the short end of the yield curve. But the pivot narrative is, well, they're over tightening, they're slowing the economy, which is what we're talking about. inflation is going to cool off, prices are going to come down, and the Fed's going to have to pivot to rate cuts. That's the first part of that is true. The second part of that is nonsense. The Fed's not going to pivot anytime soon, and we know that because they told us. They said they're going to raise rates into 2023. There'll come a time when they feel that inflation is coming down, but that doesn't mean they're going to cut rates. That just means, again, Jay Powell said this on September 21st at his press conference following the last or the one before last FOMC meetings, the one on September 21st. He said, what we'll do if we see inflation coming down, we'll pause, but the pause could last a year. The earliest rate cuts might be in early 2024. So the Fed's not going to cut rates, but they have raised them a lot relative to the strength of the economy. Put it differently, if they do cut rates, it's going to be for very bad reasons. It's going to be because we're in a very severe recession. So people say, well, the Fed's going to cut rates, buy stocks. And that accounted for the narrative accounted for the stock market rally from late July to late August, a little bit the recent rally. But the fact remains, the likelihood is the Fed will not cut rates. If they do, it's going to be for very bad reasons. So either way, it's bad for stocks. So
there is no doubt that we are facing an economic slowdown. The question is how severe it will be and how long it will last. Some experts are predicting a full-blown recession that could last for years. The last recession was caused by a housing market crash and a financial crisis. This time, it is likely to be triggered by many scenarios. With the United States yet to clear the imposed tariffs on imported goods from China, their relationship is said to be on the brink of collapse. This is already having an impact on both countries and is starting to ripple out to the rest of the world. A recession would significantly impact consumers, businesses, and the government. Consumers would cut back on spending, businesses would cut back on investment and hiring, and the government would have to deal with lower tax revenues and higher welfare costs. We are already seeing some early signs of a recession, such as a slowdown in manufacturing activity, rising unemployment, a high increase in mortgage rates, and ever-increasing energy prices. If all these continue to escalate, we will likely see a full-blown recession in the next year or two. This would be a major shock to our economy and would change the financial landscape for a generation. Listen to these carefully.
So I look for a severe recession. The Fed's going to continue to cut rates. They've probably raised them too much already. I'm not saying what the Fed is doing is right. I'm not saying it's the best policy. What I'm saying is it is the policy. It's what they're doing. So you can't just look at your own wish list. You have to look at what the Fed's actually doing. So they want to get inflation under control. They said so. It's job one. They can't really deal with the sources of inflation, which come from the supply side. So they're trying to destroy demand. But when inflation is coming from the supply side and you're trying to control it with demand destruction, you got to do a lot of destruction to have much impact. People who are unemployed probably aren't worried about the price of gas. They're probably not buying gas because they're home, but that's not good for the economy. So, I would say a severe recession on the horizon. Inflation will come down, but not all at once. Interest rates are going to remain high. Mortgage rates are going to remain high. The Fed's kind of out to conduct this demand destruction, as I described. There could be worse on the horizon, but that's the base case.
Rickard believes that the next recession will be caused by a combination of factors, including the end of the Fed's quantitative easing program, the rise in interest rates, and the debt levels of both the government and consumers. There are different types of recession. The most common ones are microeconomic recessions that last for just a few months and can be quickly overcome by the market. The severe recession of 2008 was not something like that. It was a macroeconomic recession that changed the lives of a generation and created long-term consequences for many people. We are indeed in the midst of a severe recession. This is the recession that will change a generation. It has already changed how we think about the economy and our place. We are no longer content to ride the wave of prosperity, but are now forced to question every aspect of our lives. Past recessions have shown us that our economy is not as stable as we thought it was. We are obviously now facing an uncertain future, and we must make difficult choices in order to survive. We have to make sacrifices and tighten our belts in order to make ends meet. While it's impossible to know for sure what the future holds, Rickard's words should be taken seriously. He has a proven track record of being one of the most accurate economic forecasters in the world, and his predictions have helped investors make billions of dollars. If Rickard is correct, then the world is in for a very tough few years. Families will lose their savings, unemployment will rise, and the global economy will be plunged into a recession. Let's hope he's wrong. That's all for today, guys. What can you say about the impending severe recession ahead of us? Would it be worse than the ones that have happened in the past? Feel free to let us know your thoughts in the comment section below. Kindly share this video with your family and friends, and don't forget to hit the like button and subscribe to our channel for more updates. Thanks for watching.